So you all are warmly welcome to the contemporary issues in accounting. So if I go to the LMS page, this is a 3 credit bearing course unit. This is your last final paper, which is the date that is on. You have only 1 week left for the exam. That is on December 8th, 8th of December. It is a Monday. Okay. Okay. So with that note, let me go through the paper. This paper consists with 5 questions, 20 mark each. Okay. Easy. You can get a pass. Question number one, Suleiman Limited Managing Director has recently attended a seminar of fair value accounting. The fair value, the word here to me, I will remember what SLFRS 13. If you Google it, SLFRS 13, you can see fair value measurement standard. You need to download it. Not exam you can't use. You need to go through with the materials. This is since this is an open book examination versus historical cost accounting. He considered that fair value accounting plays an important role in the structuring financial discourse in the financial statement and ensuring that necessary information is available to different groups of people for their decision making. Hence, he recommends board to adopt a policy of revaluation of fixed asset every 5 years. That is correct because the entire class of the asset, if you have 5 lands, if you revalue, you can't revalue 3 lands as per your wish. Two, you are not revaluing. You can't do that. Okay, you need to revalue entire class of the asset if it is a land or the building, whatever. Okay, you need to refer then LKS 16 as well. The PP standard, LKS 16, property plant or the IAS 16, property plant and equipment. Okay, while it's loading, I will go through with the course question. You are the CFO. You assume that you are CFO. The represent plant and machinery straight line over 8 years. With no salvage value, the residual value. Assume today date is 21st December. The company prepares 31st each year financials and currently estimated purchased on this date at a 480. Value to the business this date on 240. Okay. Write a report to managing director, summarize the argument for the against the arguments for and against. You need to use the pros and cons. Vasi dekama. Fair value accounting. Your director solid general knowledge of accounting, but he is a qualified, not a qualified accountant. Recent research finding you may clearly extracted and cited. You can't use the research citations, but you can direction for the standards. Okay. So if I'm the student who write in this exam, what is the fair value? I first write. The fair value in layman terms, fair value is the market value. If you can't write that, okay. So fair value, if the definition I will write, fair value is the price that would be received to sell an asset or to pay the transfer a liability in an ordinary transaction between market participant at a measurement date. So you can use the fair value hierarchy. There is 3 levels. Level 1, level 2, level 3 inputs. You can use the principal market, whatever the if the not as absence of the principal market, you are go through with the most advantageous market. I think here not no need to, right? But for the betterment, I will write it. Highest and best use in financials, valuation, premise. Hmm. Here, when a quoted price means it is observable, right? Fair value hierarchy. I think here need to be there. Fair value hierarchy. Fair value at the initial recognition. You need to read valuation techniques here. An entity shall value valuation technique that appropriate in the circumstance for which sufficient data is available. Okay. Inputs to valuation techniques. Valuation techniques are measure fair value shall maximize the use of relevant and observable inputs and minimize the unobserved inputs. Fair value hierarchy, you can see to increase the consistency and comparability in the fair value measurement and related disclosures, this SLFRS enables a fair value hierarchy consists with 3 layers. 3 layers. Level 1 inputs, prices quoted prices that is observable, unadjusted, and level 2 unobservable. Level 2 is missing now. Here, the availability of input, their relative subjectivity might affect the section appropriate valuation technique. However, the fair value hierarchy prioritizes the input to valuation technique, not the valuation technique used to measure the fair value. For example, fair value measurement developing use the present value technique may be recognized within level 1, 2, or 3. Okay. Level 1 inputs unadjusted. Level 2 inputs here. Inputs other than quoted prices in a level 1, observable, unquoted, right? Here, highly judgmental, unobservable inputs, you need to write it. Okay. So, if I go to the LKS 16, I'm not going to specifically discuss the question. If an item PP is revalued, the entire class of property should be revalued. As per the para 36, you need to write those stuff. Okay. So 10 marks, if you write these two, only 2 marks or 3 marks will be given. Okay. You need to elaborate. Okay. So give me 1 minute, please. I will show you an answer which is generated through ChatGPT for understanding purpose, not to get copy the ChatGPT because in the exam you can't use the ChatGPT. Give me 1 minute. That Word document is where I also can't understand. Where is that? Uh, yeah, here. Here. So question, read the question again, please. I will give you 1 minute to read. Write a report to MD. So you need to have appropriate salutations as well. From to managing director, from CFO, you are the CFO, date and subject evaluation of the fair value versus historical accounting. Introduction, the following your recommendation to adapt policy, revaluing every 5 years. It is evaluate that advantages and disadvantages of a fair value accounting compared to historical cost accounting. Okay. Although fair value accounting is used under modern standards such as IFRS, it is important to assess whether such policy is appropriate for our company, means Suleiman Limited. This report summarize this report summarizes key argument definitions and relevant research finding to support informed decision making. Key concept, you need to explain the concept. Historical assets are recorded at original purchase price, simply cost. Depreciation based in cost is useful life. Valuation do not change unless it is impaired or disposed. Fair value accounting, the standard terms are referred. The price that would be received to sell an asset or paid to transfer a liability in an ordinary transaction between market participant at a measurement date. The terms are important at a measurement date. In simply, current market value is the fair value. Okay. Revaluation model under LK 16. You have cost model, initial, and subsequently standard encouraged to use cost model or either revaluation model. A company choosing fair value accounting must apply consistently to the entire class of assets. Okay, that is as per the LK 16 para 36. Okay, you need to write those stuff. Arguments for adapting, improved relevance and decision usefulness. Fair value accounting improves up-to-date asset values, improve transparency for the stakeholders, okay, investors, lenders, analysts, and regulators. Okay, better reflection of economic reality, the current condition of the business, the true replacement cost, more accurate financials. Okay, enhanced borrowing capacity and credibility. Updated values may improve collateral for bank, creditworthiness, investor confidence. Collateral means what? Apakian collateral. Compliance with modern reporting trends, avoiding understated asset values. Historical cost may significantly understate long-term assets during inflationary period. Arguments, you need to write increased volatility, subjectivity of the estimation because the fair value accounting, the revaluation, valuation models, discount rate, professional judgment may be very higher cost of implementation, Professional valuers, regulatory evaluation because additional audit procedures, complexity, probability, impact on depreciation and probability, profitability ratios because expenses are high, no depreciation, whatever the stuff you can think and write. Okay. So consideration for Suleiman Limited, you suggest policy to revalue every 5 years. Given the example asset, no need to elaborate because it is separately discussed based on the complexity and volatility and the economic circumstances which is pertain to Suleiman Limited. Limited balance approach is advisable. The company should adopt. The revaluation model only if reliable valuation data is available. The cost value does not outweigh benefit. The cost of valuation does not outweigh can benefit to the cost of the board seeks improved financial transparency. Okay, you can write. The second one. The second one suggests set out the charges P&L for the year ending 31st March 2022 to 28. Respect of item purchase on 480 on this date, 1st April 2021, revalued this date. Assuming compare use normal depreciation charge එක අහන්නේ. එතකොට 4,80,000 බෙදීම here කිව්වා 80 years කියලා. මෙතන කියනවා 4,80,000 බෙදුවොත් 60,000යි. එතකොට 4,80,000 බෙදුවොත් වෙන්නේ 60,000. I think the answer should be there. Here you can see answer. 4,80,000 බෙදීම 8 60,000යි. මේ තියෙන්නේ cost එක මෙච්චරයි. depreciation ITS නම් 60,000යි. එතකොට 60,000ක් වෙනවා. කොච්චර කාලයකටද? ඒතකොට 2021 කවද්ද ගත්තේ මේක? මං හදන්නේ නැහැ මොකද මේක ෆස්ට් ඉයර් එකක් නෙමෙයිනේ. 21 4යි එක ගත්තේ. එතකොට 22 23 24 25 26 කියන අවුරුදු වලට 60,000 ඒවා පහක් charge වෙනවා. ඒ කියන්නේ ලක්ෂ 3යි 4,80,000 ලක්ෂ 3ක් ගියොත් 1,80,000ක 2.40ක් වෙනවා කියන්නේ එතනත් 60,000ක revaluation gain එකක් තියෙනවා. එතකොට PP debit OCI අද revaluation gain එක යන්නේ other comprehensive income credit වෙනවා 60,000ක් 2.40 බෙදන්න ඕනේ the remaining useful life කියන්නේ 5 years old කියලා 3ෙන් බෙදුවොත් 2.40 3ෙන් බෙදුවොත් 80,000යි. right මෙතන 1.40 3ෙන් බෙදුවොත් 80,000යි. here 2.40 අප්වර්ඩ් රිවැලියු 80,000යි. ඒතකොට මෙතන 60යි 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 60,000යි 80,000ක් වෙනවා 2027. 27 සහ yes 27 28 80,000යි. right මේක කියනවා. Right, you need to write those stuff. Calculate the profit and loss, P&L for the year ending. Explain the balance of real and reserve which related to PP question will be treated. Assuming sold at this date. ඒ කියන්නේ අපි 2027 විකුණනවා කියන්නේ 27 කියන්නේ 80,000යි කියන්නේ ලක්ෂ 3යි 3යි 80යි 80යි කියන්නේ 4යි 60යි. නෑ වැරදි. ඒතර දැන් මෙතන විකුණනවා කියනවා 2027 අප්‍රේල් එකේ කියන්නේ 22 23 24 25 26 කියන්නේ 3යි 80යි 4යි 80 එක 3යි 80ට විකුණනවා. ඒ කියන්නේ 10 3යි 80යි ලක්ෂයක් තියෙනවා. ඒක 90ට විකුණනවා කියන්නේ 10,000ක් පාඩුයි කම්පැනියටනේ. එහෙමද? Carrying amount this date 2.40යි. Depreciation this date to this date 80,000යි කියන්නේ 1.60යි. 2.40 එක 80,000 කරන්නේ. කරන එක ගන්න බැරි. valued amount එකෙන් තමයි අඩු කරන්න ඕනේ. 2.40න් 80,000ක් ගියොත් 1.60යි 1.60 90ට විකුණනවා කියන්නේ 70,000ක් loss එකක් තියෙනවා. The loss of the revaluation P&L disposal occurred during the period. The loss of recognized treatment revaluation is related to asset at revaluation. The revaluation surplus is recorded in the equity. Disposal of the revaluation balance of the revaluation related to the asset may be transferred directly to the retained earnings. ඒ කියන්නේ this transfer do not recycle to P&L. In practice, debit revaluation reserve and credit to retained earning. Okay, since the asset disposal and any balance and revaluation related to asset may be transferred directly to the retained earning. Okay. එතකොට revaluation reserve debit කළා retain earning credit කරනවා. Therefore on disposal the remaining revaluation related to PP transfer revaluation reserve to return earning. Okay. net impact එක දීලා තිනවා P&L recognize loss of disposal 70,000 equity reserve there is a equity revaluation reserve related to the asset at that transfer to retain an equity this transfer bypass P&L no impact actually P&L impact 70,000 on loss equity equivalent revaluation reserve to retain earning no P&L impact because එකකින් මාරු වෙනවා තව එකකට okay. What is the journal entries is given? Purchase debit asset, PP credit cash, annual depreciation. Depreciation is expense and credit to accumulated depreciation. It is denote the decrease of the asset. Revaluation debit PPE and credit to OCI, the revaluation reserve, other comprehensive income. Depreciation after revaluation 80,000 that is same. Disposal cash debit PPE credit 160, loss on disposal debit to P&L 70, transfer revaluation reserve because debit revaluation reserve and credit to return earning. Okay, that is the answer. You can get the 10 marks easily. Yeah, so 10 marks easily. So entire 20 marks you will get these. You need to standard practice as well. Okay, I will later discuss this. And question number 2, the here part B 10 marks is given. This is for Lanka Oil is following expenses during the period. Intangible asset because the intangible asset you need to refer IAS 638 intangible asset and 632 website development cost. Okay, LKS 38. I will open and 6 standard interpretation committee 32. 632 you need to refer. Website cost. So if I go to the question, you need to refer, right? Lanka Oil, give me 1 minute. Lanka Oil, because training of the staff, you can't P&L. Web server, you can capitalize. Payment for photographer, definitely you can't. Hardware equipment, you can capitalize. Advertising cost can't. Cost of test run cost can't capitalize actually. Cost of test run for the site, but it can be argued. Monthly payment to the consultant you can capitalize because the consultations of the professional piece. Here, purchase price here, directly attributable cost, employee benefit, professional fees you can because cost of testing whether the asset function properly. That is capitalized. So as per the LKS 38. Okay. Test run, first time one off, no, you can capitalize, but it is argued. Advertising, promotional, you can't. Staff training, no. Administrative and other way. That's why I told you, you can cite the standard and identify the type of cost capitalized as a part of internally developed with reasons. Okay. 630, what is mean by 632? We'll go through with the standard interpretation or standard. Website development cost, standard interpretation committee, standing interpretation committee, okay. So I will go through the stages of can be described. Planning, no need to waste time. Huh? Okay, give me 1 minute. So go through with the content. Example, planning. Accounting recognized as expense. Feasibility study, defining hardware software specifications. Purchasing and you can capitalize. LKS 16. LKS 38 intangible asset. No? Obtaining domain name. Recognized as expense when the incurred. Developing operating software. Stress testing. Test run, it is expense. You can't capitalize actually. It is a test run cost, it is expense. Okay. Layout, creating, purchasing, preparing, that is capitalized, no? Backup data, selling and administrative overhead, it is expense, okay? Staff training can't, huh? Training of employees, it is expense, recognized as expense, okay? So that is also you can easily get. Later we'll discuss the decommissioning liability if required. So we'll check the answer as well. I will share this document. This is actually ChatGPT answers, right? Here. Internally developed website cost, SIG 32, intangible asset, website cost, training, expense, web server capitalized, photographer capitalized. No, no, no. Photography for website visuals. So here, photography, photographer to capture visuals. Bad. You can't use this expensive. Wrong, huh? Hardware equipment capitalized, advertising cost expense, monthly payment to consultant capitalized, cost of ready for use. This capitalized argument, you can get answers, marks. So to make a Lanka Oil PLC has oil pipeline related to decommissioning liability for the restoring land, remediation for the environment, removal pipe. The liability varied in the current year due to changes in regulatory requirement. The capitalized cost of pipeline in the books of account stand at 5.5 million. The capitalized cost for pipeline can make a PP එකක් විදිහට කරන්න. ඒකල මේකේ value එක 5,55,000 කියලා කියනවා. Depreciate over 5 years, 5% over last 15 years, 5% can 20 years, right? Decommission liability as at this day, 1 million. Liability එක තමයි මෙදාට measure කරලා තියෙන 1 million present value of future cash flows. The cash flow payable at 20th at a risk-free rate 7%. Amount is estimated. The cash flow payable, the decommissioning present liability is this date 1 million. The cash flow payable at the end of the 20th year is measured at a risk-free rate of 77% and estimated 1.7 million. The decommission liability we can use. Present value is the future value divided by 1 plus r into the power minus a. Therefore, future value is 1.7 million. You need to pay at the 20th year. Here, one employee's rate is given 7%. Risk-free rate into how many years? Explain the accounting treatment for the change of decommissioning liability related asset and related asset book of accounts because this is LKS 16, IAS 16 as per the unit to depreciate. Decommissioning liability means if RIC 1, you need to refer end at 2023. Okay. And depreciate 5% over last 15 years. Decommissioning liability asset. This date, 1 million. You can use the 20%, right? This date 1 million at the beginning. State 1 million. කියන්නේ ආරම්භයේ liability එක දීලා තියෙනවා අවසානයෙන් අහනවා. අපි 2023 3යි 30 12යි 31ට. ඒ කියන්නේ 22 ජනවාරි කියන්නේ අවුරුදු දෙකක් ගිහිල්ලා. හරිනේ? 22 ජනවාරි 22 අවුරුද්ද 23 අවුරුද්ද දැන් අවුරුදු දෙකකට පස්සේනේ ළමයි. 20th year the cash flow payable කියන්නේ මෙතන 20th කිව්වහම liability එක අපි බලමු විනාඩියක් දෙන්න. So it says carrying amount 5.5 depreciate 5%. 20 years no decommissioning liability this date 1.1 million RMB Revised estimated cash outflow 20th 1.7. Discount rate එක දීලා තියෙනවා. Okay, IAS 37 provision and IFRIC 1 changes in decommissioning liabilities, restoration and similar liabilities. Initial dismantling cost requires decommission liability recognized at the present value of the future cash flows, right? The liability එකක් අපි payable එකක්නේ. Present value provides guidance on changes. එතකොට compute the present value of new obligation. Revise present value. Previous liability 1 million. එතකොට decrease in liability this much. Means at the 20th year 1.7 million divided by 1 plus r into the power minus n of එතකොට 1.7 million you need to 20th year 7% at 20 each as per the question, right? You need to pay 20th year, right? If I go to the Excel, give me 1 minute. I don't have actual email. Yeah, so you can use 1.7 million. No, 1.7 million divided by 1 plus r means 0.07, the power minus 20. ආරලක්ෂ 39,000 ගන්න. එතකොට මේකේ 20 අවුරුදු 20කින් ගෙවද්දී ඒක අග මේ දැන් අගය. තමයි මේ ගන්න. right? right. ඒක තමයි මෙතන කියන්නේ මේ තියෙන්නේ. 4 4යි 3යි 9යි. 4යි 3යි 9යි. හරිනේ. තමයි මෙතන කියන්නේ. right? Revise present value this much, previous liability 1 million, decrease in liability 1 million into this much 5.51 because the asset we use changes due to update regulation. Reduce carry amount. Because the asset is still in use and changes is due to updated regulation, if the liability decrease, reduce the carrying amount of the asset. If the reduction exceed the carry P and P provision for decommissioning liability, expense credit PPE. This will I check and may let you know. I have also doubt. Here discuss the issues that will be encountered in determining the decommission liabilities in real practicals. What is estimation uncertainty, environmental requirements will change, appropriate discount rate, risk-free rate, projection, specific rate, entity incremental borrowing rate that will be impacted. Okay. What is this? Technological changes, future technologies may reduce or increase dismantling cost, legal and regulatory requirement, inflation cost escalations, determining useful life of asset, availability of specialists, in right? Those are you can think and write here. This I will check. This 5 marks you can get. Question number 1 we discuss fully. Question number 2 partially discussed. Okay, I will check and let you know. Question number 3 we'll later discuss. 4 later discuss. 5. Read please. Who can even we'll have another meeting, okay? Thank you.